If you are an Intel fanboy and you're wondering what happened to that stock and what happened to the company's revenue and why is it fallen off a cliff, look no further than Advanced Micro Devices, ticker symbol AMD. What is going on, investors? Hopefully, you guys are doing well out there. Talk about AMD. The company just reported their Q4 earnings moments ago. We'll get into them. We'll take a look at the revenues, the profits, all of the different business units over at AMD, and talk about how this relates not only to AMD, but the rest of the chip sector as well, particularly Intel. This company is absolutely taking market share and taking business away from Intel. And we'll talk about this also from a technical perspective in the after hours. Hello, boom. This stock is rocketing higher after being up over 3.7% during the regular trade. I'm seeing up over 3.5% in the after hour trade. Talk about this from a technical perspective. Boy, if you can hold above 75 on AMD, that will be critical from a technical perspective. Now, over the last year, stocks down 34%. But like a lot of stocks that were down last year to date, they are ripping up over 17%. And over the last 6 months, still showing a downtrend. This Q4 earnings came in $5.6 billion worth of revenue. Wall Street was expecting $80 million lower, so they beat expectations on that revenue side. They have an adjusted kind of a non-GAAP EPS number. I'll walk you through that on the financials. I'll show you what they adjust out and how you can factor that into your valuation and your metrics if you want to do that. That was 16% growth on that revenue side. They also gave us guidance for the first quarter of the upcoming year. Revenue coming in at $5.3 billion. If this was Intel, it would have probably been closer to about $2 billion, but AMD is actually doing relatively well, and they're taking business away from Intel. And you see the expectations for Q1 for AMD was $5.51 billion. Again, we're going to come underneath that, although they gave plus or minus $300 million. So it could come in right at $5 billion in Q1. It might come as high as $5.6 billion when you come over here. And again, look at the spread on Wall Street. It's not wildly beating expectations, but it's not coming way underneath it. Like we're talking about 20, 30, 40% underneath it, like we saw over at Intel just a couple of days ago. So that's going to give some investors confidence that the upcoming year, the next 3 quarters or so, are going to be relatively okay for AMD, as they're going to churn out maybe anywhere from 5, maybe as high as $7 billion towards the end of the year. We talked about how Intel, they're just cratered after they pointed to guidance expecting between $10.5 billion and $11.5 billion when Wall Street was expecting a number close to $14 billion. So this company's business is falling off a map, but AMD is showing that they're a little bit more resilient. Now, we've had some C-suite turnover at AMD as Marvell's former CEO is going to take over at the CFO role over at AMD. And then finally, a lot of analysts I noticed over the last quarter or so have been piling behind AMD as the stock, obviously down over the last year, has pulled into a valuation range, which if they are able to kind of meet these expectations, actually provides a little bit of upside in my opinion. You got a forward PE on this one close to 20, price to sales, not overly overvalued like maybe you see in other segments of the market. Some analysts choosing this as a top chip stock for 2023. Full disclosure, this is also my top chip stock in my portfolio as well. Net revenues coming in at AMD at $5.6 billion. We talked about how that was about 16% growth year over year, beat expectations as well. The other thing that you look very closely at when it comes to AMD are these gross margins coming in at 43%. Last year, they were at 50%. So industry-wide, we are seeing margin compression as lower prices, slower demand for these products are driving down the margins, higher promotional activity as well. Now, the other thing hurting the margins a little bit is they do have to take these amortization and acquisition related intangible charges to the tune of $443 million. So that impacted your total cost. That impacted your gross margins as well. If you strip this out, they do go up a little bit. In fact, AMD does give you a non-GAAP gross margin percentage in kind of the top of the press release. So they show it to you here, the non-GAAP. I'll roll through the GAAP earnings and the GAAP numbers. That was at 43%. When they strip some things out, it's at 51%. And you see a year ago, it was actually at 50%. So it's actually improved year over year. From a non-GAAP perspective, we'll focus on the GAAP, which is general accepted accounting purposes. Again, last year it was closer to 50%, in part due to because you have some amortization costs that are likely not going to recur in subsequent quarters. Off of this $5.6 billion worth of revenue, you have gross profit coming in at about $2.4 billion. You have your research and development fees here went from 811, boom, up to $1.4 billion. So the company is going to continue to spend, obviously a highly competitive industry. We kind of take a dump or make fun or poke fun of Intel, but look, Intel's spending a lot of money on R&D as well. And by next year, they could come out with a fantastic product and be taking market share away from AMD. So this company's got to keep their foot on the gas. Marketing continued to tick up as well in excess of the sales growth from 412 up to 590. You have other kind of non-GAAP charges here as well, or a non-cash charge, more amortization of about $600 million. So when you factor in this $600 million here in amortization, another 440 up here, that's $1 billion, not necessarily related to what's going on in this quarter and what's going on over at this business. That really impacted your operating income over at this company. Last year, you made $1.2 billion. Again, this year, from a GAAP perspective, you lost 149. But again, if you want to strip these numbers out, it's a number very comparable to last year. Now, this company is not growing necessarily as rapidly, but in this environment, you're really just looking to tread water. You're trying not to pull an Intel where you have to guide down 20, 30% on that revenue side. You're really just looking to tread water over at AMD and probably NVIDIA as well. And if you're able to do that, and then you have demand increases potentially as early as the third and fourth quarter of this year, well, these companies should be in nice position to start spinning profits into next year from a GAAP perspective. Now, when you come over here to the balance sheet, one of the reasons why I like AMD is the balance sheet's pretty nice. Okay, they have plenty of cash on the balance sheet. They don't have a lot of long-term debt as well. Just $2.5 billion over at this company, so very much covered by their cash position. The other thing that we notice over at this company is gross margins, like the entire chip sector, are going to be under pressure. And this is bad news for AMD, but probably bad news for Intel as well, as we have plenty of inventory over at AMD year over year, from about $2 billion worth of inventory last year all the way up to 3.7. So they're going to be giving some of this stuff away, and we'll see here when we get down to the segment results, they are literally giving away some of this inventory at a loss and not making money on them. Again, that's going to impact AMD, but also impact competitors as well. Now, they don't give you a full readout from a kind of a dollar perspective at AMD from a cash flow perspective. You just get it in a summary. So your operating cash flow at AMD came in at $567 million in the quarter. Last year was $822. For the full year, you were basically flat on that operating cash flow. Again, not something I'm wildly excited about, but one of the reasons why I still hold on to my shares of AMD is the stock is not wildly overvalued. So if this stock was trading 40, 50, 60 times forward earnings, I probably would try to sell it or try to get out of it. I certainly wouldn't be looking to add to a position. But the stock's not wildly overvalued, as it's kind of hit the pause button and it's kind of coasting on its operating cash flows. Again, hoping for a rebound sometime Q3. I'm really looking for really Q1, Q2 of next year. Many analysts are pointing all the way to Q3, Q4 of this year. We'll see who ends up being right. Investing activities, you burned through about $1 billion. Financing activities, not a lot. So they did go negative cash flow running the business in the most recent quarter, but nothing really to be concerned about. Again, from a balance sheet perspective, cash, net debt perspective, very financially healthy company. Now, here's the segment results. You got your data center, very strong results here, okay, from 1.16 up to about $1.7 billion. Your operating income not expanding a whole lot. It went from 370 up to 444. Again, margins in this entire sector are going to be under pressure, I think, for the rest of the year. Here's your client PC business. Oh my goodness. just like Intel, basically fell off by about 50% from 1.8 billion down to 903. Nobody is buying laptops and PCs. And notice they basically had to give this stuff away. They actually lost money on this 903 from a 530 million operating income last year on a quarterly basis off about $1.8 billion worth of revenue. You lost $152 million. But I tell you what, if you can maintain that, lose just a little bit of money and squeak out operating profits in your other business units, when the demand comes back, if and when the demand comes back, well, the company should be well positioned. Gaming held up a heck of a lot better than I thought. Now, in their guidance, they are saying that they're going to see year-over-year client and gaming segments are expected to decline, partially offset by the embedded and the data center growth. So the company is expecting in the upcoming quarter, you're going to have data center growth, you're going to have embedded growth, which we'll talk about here in a minute, but you're still going to have PC weakness. You're still going to have kind of graphic card and gaming business continue to fall off. But look, it held up a heck of a lot better than I thought it would, from 1.7 down to 1.6. But again, your operating income's starting to shrivel up as well, as they're just giving this stuff away basically at almost 0% margin. And then finally, you've got your embedded business. Here's what is just paying the bills over this company. Again, fueled by the Xilinx acquisition a year ago, just $71 million worth of revenue there, all the way up to $1.4 billion. And look at this. Nearly $700 million worth of operating income from that business unit. That was a fantastic acquisition, as it didn't do anything to really blow up the balance sheet over at this company. It did dilute you as a shareholder, but boy, it added a lot of operating profits in obviously a difficult PC market. But this company is holding steady on their data center. The gaming revenues held up a little bit better than I thought they would, and your embedded business just looking fantastic. Again, the company will give you kind of GAAP results and non-GAAP results. I tend to focus just on GAAP and then strip those things out in my mind as we walk through this. Now, from a technical perspective, this stock got above a key technical level. Now, there's a key technical level that we've been talking about on this channel, I believe, for like 2 years here. It's the $75 level at AMD. Once you broke through $75, it was basically look out below. And it was just a matter of time. Could you get back to the $75 level? And you really got to get through it. And we've been hitting our head since November on that $75 level. And the stock just hasn't been able to push above it. I am seeing in the after hours, we've pushed up here to about $77. Now, it's not like we're going to go out and have a party. You need to have some solid closes above 75. That would turn resistance back into support, which would support that potentially a new uptrend is starting to form at AMD. You also see a similar formation if you come over to NVIDIA. It's in a little bit more advanced stage. It too just more recently pushed through a key area of resistance up here at 193. It pushed up above that and closed above it. Doesn't mean it's off to the races. Doesn't mean we're rocking emoji to the moon, but it is a good sign that these stocks are pushing above areas of resistance. Absolutely appears new uptrends are starting to form. Uptrends are higher sets of lows, followed by higher highs as well. That's why this stock needs to get above the previous clusters of highs back here in November. Again, right in that $75, $76, even $77 range. I'd like to see this one poke all the way up close to about $80 per share. And again, you're expecting a pullback at that level, maybe back to 75, maybe even a little deeper than that. You might come just underneath 75. That would be perfectly fine. As long as this orange uptrend line that I have stays in somewhat tact, it can shallow out. You wouldn't want this stock to drop below the lows that we made back here in January, about $62 per share. That would cancel out the formation of this uptrend, bring much higher probability that you'll retest these lows back in October and likely exceed them, likely coming down to about $50 on AMD. Longer term investors in a stock like this, my opinion, can nibble at these areas, and by nibble, maybe add just a couple of percentage points to an existing position. More cautious investors would want stop losses underneath probably the $63 level, because again, you break 63, I think you're coming to 50. But if some of the analysts are correct and this company rebounds sometime in the back half of this year. Look, analysts are expecting 17% and 25% growth respectively in Q3 and Q4. I'm not really believing that, but if this ends up being true, well, yeah, this stock is likely well positioned to continue this uptrend and likely finish the year considerably higher than where the share price is today. That was AMD. If anybody that loves Intel was wondering where the heck the business has gone, well, it's gone over to AMD, and the share prices and the stock market is trying to tell you that, as Intel stock is down nearly 1% in the after hours, and AMD, after being up 3.7% during the regular trade, is now up 2.7% in the after hours. We'll see if that $75 level holds. From a technical perspective, that is key for AMD. Hopefully, you guys enjoyed today's video. Big week of earnings. We'll be back again soon. Good luck with your investments.